Top 13 Investment Avenues. Where to put your money in 2025. What's up everybody? It's Jake, and welcome back to the channel. Today we're talking about something that's super important, no matter where you are in your financial journey investing. That's right, we're diving headfirst into the top 13 investment avenues you should be looking at in 2025. Whether you're just starting out with a few $100, or you've got a portfolio bigger than my Tesla payment, this video is for you. We're going to break down each investment, talk about the risks and rewards, and figure out which one fits your goals best. So buckle up, smash that like button for the YouTube algorithm, and let's get started. Equity, stocks, your piece of the pie. First up, we've got the classic stocks, also known as equities. Now, when you buy a stock, you're essentially buying a tiny piece of a company. You become a part owner, a shareholder, which means you get to share in their profits or losses. Gotta keep it real, guys. Stocks are known for their potential for high returns, but remember, with high rewards come higher risks. The stock market can be volatile, kind of like trying to predict which of my neighbors is going to complain about my Tesla next. But over the long term, stocks have historically outperformed most other asset classes. So, if you're looking for growth and you've got time on your side, stocks could be a good fit. Bonds, fixed income securities, playing it safe. Alright, let's move on to something a little more stable. Bonds. Unlike stocks, which are like owning a piece of a company, bonds are more like giving a loan. You lend money to a government or a company, and in return, they promise to pay you back with interest. Now, bonds generally offer lower returns compared to stocks, but they're also considered less risky. Think of them as the reliable friend in your investment portfolio. Not the flashiest, but they'll always be there for you. They're a good option if you're looking for a steady stream of income, or if you're closer to retirement and don't want to be riding the stock market roller coaster. Mutual funds. Let the pros handle it. Don't know a stock from a bond? Don't worry, that's where mutual funds come in. Mutual funds are like baskets of different investments, stocks, bonds, or a mix of both, managed by professionals. It's like having a personal shopper for your investments. They do the research, pick the assets, and manage everything for a small fee. Mutual funds are great for diversification, which means spreading your money across different investments to reduce risk. It's like that old saying, don't put all your eggs in one basket, but in this case, the eggs are your hard-earned cash, and the basket is your investment portfolio. Chapter 4. Exchange-Traded Funds, ETFs. The Index Fund Revolution. Now, if you like the idea of mutual funds but want something even more flexible and cost-effective, you need to check out ETFs, or exchange-traded funds. ETFs are similar to mutual funds in that they hold a basket of assets, but they trade on stock exchanges just like individual stocks. This means you can buy and sell them throughout the trading day, giving you more control. Plus, they tend to have lower fees than mutual funds. ETFs are a popular choice for passive investing, which is basically investing in a broad market index like the S&P 500 and letting it ride. It's a great way to match the market's performance without having to pick individual stocks. Chapter 5. Real estate bricks and mortar, and maybe a mortgage. Let's be honest, who hasn't dreamed of owning a piece of land, right? Well, real estate investing is exactly that. Buying, holding, and managing property for profit. This could be anything from renting out your spare bedroom on Airbnb to flipping houses like those HGTV shows, although trust me, it's not as easy as it looks on TV. Real estate can be a great way to build long-term wealth, generate passive income, and even enjoy some sweet tax advantages. But it's also a lot of work. You've got to deal with tenants, maintenance, and the ever-changing real estate market. Chapter 6. Gold and Precious Metals, the OG hedge. Gold, the OG bling, has been a store of value for centuries. When the economy is uncertain, people flock to gold because it's seen as a safe haven asset. It's like the financial equivalent of comfort food. Now, gold doesn't generate any income like stocks or bonds, but it tends to hold its value during periods of high inflation, which is when prices of goods and services go up. You can invest in gold in a few ways, buying physical gold bars or coins, which, let's be real, is pretty cool, or investing in gold ETFs or mutual funds. Chapter 7. Commodities. Riding the price waves. Commodities are raw materials like oil, natural gas, gold, agricultural products, basically the stuff that makes the world go round. Investing in commodities is essentially betting on the supply and demand of these materials. For example, if you think the demand for oil is going to go up because everyone is suddenly driving their gas guzzlers again, you might invest in oil futures contracts. Commodity prices can be very volatile, kind of like my sleep schedule when I'm editing videos all night. But if you're comfortable with risk and you understand the commodities markets, there's potential for big rewards. Chapter 8. Cryptocurrencies, the Wild West of investments. Cryptocurrency, the Wild West of the investment world. From Bitcoin to Ethereum to Dogecoin, yes, that Doge, cryptocurrencies have taken the world by storm. These digital currencies use cryptography for security, and they operate independently of central banks, which is a big draw for some investors. Crypto is known for its volatility. Seriously, the price can swing more than my mood after a bad night's sleep. But it's also attracted a lot of attention for its potential for high returns. Just remember, crypto is still a relatively new asset class, and it's important to do your research and understand the risks before you jump in head first. Chapter 9. Peer-to-peer, P2P, lending, cutting out the middleman. Ever wanted to be the bank? Well, with peer-to-peer lending you kinda can. P2P lending platforms connect borrowers directly with lenders, cutting out traditional financial institutions. As an investor, you can browse loans and choose which ones you want to fund. It's like being a digital loan shark, but, legal and hopefully less intimidating. P2P lending can offer higher returns compared to traditional savings accounts or bonds, but it's also riskier. There's always the chance that the borrower could default on their loan. Private equity is like the VIP section of the investment world. It's where high net worth individuals and institutions invest in companies that are not publicly traded on the stock market. Think startups, private companies, that kind of thing. Private equity investments can offer the potential for very high returns, but they're also illiquid, meaning it can be difficult to cash out your investment quickly. Plus, they typically require a large minimum investment, so it's not exactly for the faint of heart or the light of wallet. Chapter 11. Art and collectibles. Investing in passion and hopefully profit. Art and collectibles, from classic cars to rare paintings to vintage watches, can be more than just hobbies. They can be investments too. The value of these items is driven by factors like scarcity, historical significance, and plain old supply and demand. Now, investing in art and collectibles can be tricky. It's a very specialized market, and it can be difficult to determine the true value of an item. Plus, it's important to have a genuine passion and understanding of the market you're investing in. Chapter 12. Savings accounts and fixed deposits. The safe, but not so exciting bet. Alright, let's bring it back to basics with savings accounts and fixed deposits. These are the bread and butter of low-risk investments. You deposit your money with a bank and they pay you a small amount of interest. Now, the returns on savings accounts and fixed deposits are generally lower than other investments, but they're also very low risk. Your money is insured by the FDIC in the US up to a certain limit, so you know it's safe even if the economy goes haywire. These are great options for emergency funds, short-term savings goals, or if you're just starting out and want to dip your toes into the investment waters without taking on too much risk. Chapter 13. Annuities, guaranteed income for your golden years. Last but not least, we've got annuities. Annuities are financial products that provide a stream of income, typically during retirement. You pay a lump sum up front or make regular payments, and then the insurance company, yes, annuities are insurance products, guarantees to pay you a certain amount back for a set period or for the rest of your life. Annuities can be a good option if you're looking for a predictable income stream in retirement and you want to avoid the risk of outliving your savings. However, they can also be complex and have higher fees than some other investment products. Outro. Invest smart, live wealthy. There you have it, folks, the top 13 investment avenues you should be looking at in 2025. Remember, the best investment for you depends on your individual financial goals, risk tolerance, and time horizon. There's no one-size-fits-all approach, so it's important to do your research, talk to a financial advisor if you need help, and invest wisely. Don't forget to smash that like button, subscribe to the channel for more awesome financial content, and hit that notification bell so you never miss an upload. And be sure to let me know in the comments which investment avenue you're most interested in. Until next time, stay informed, invest smart, and live wealthy.